I just got some crazy news. My mortgage just went from $4,500 to $6,050, and it'll be effective March the 1st. I have never considered a bank, but I got this black hat and this black mask because, I mean, at this point, like, what the fuck do you expect? I'm trying to keep my kids in decent schools. I'm trying to, you know, I mean, what the fuck do you expect?
Hello everyone, this is Emmanuel Cook. We will be reacting to a new video today, so make sure you guys like, comment, and subscribe down below, and let's get into the video.
My mortgage payment went from $1,600 to $3,500. This is all I have been seeing going on my timeline on TikTok right now, on how everybody's mortgage rates are increasing. Honestly, I can tell you what, when I first bought my house and I had a realtor, my realtor did not tell me anything. I bought the house. I didn't know what I was doing. I was not a realtor then, of course. And I did not learn about my payment until the closing day. I did not know how much my mortgage payment was going to be until the closing day. And I signed on the dotted line. At that point, for me, I was ready to buy a house. So I just felt like it was what it was. Unfortunately, my mortgage payment is $1,600 and it's still $1,600. But I guess my question is, for everyone's mortgage that's going up, like, I know it's a terrible situation, but also when you are purchasing your homes, are you not understanding what questions to ask your lender? Because you can always ask your lender when you go under contract on a home to show you what your monthly payment is going to be. Of course, it's going to be an estimate, but also at the closing table, when the attorney is going over how much you're going to pay for your mortgage, and they give you a piece of paper that has all your mortgages for however many how many ever years that you have to pay your mortgage for. At that time, when you're signing your papers, don't just sign the papers, you know, just ask questions that you may have about your mortgage, because once you sign and close on your home, that's your home, and then years down the line you're looking at, you have to sell your home. So it's like unfortunate. Of course, property tax always goes up, so I mean that could be another question. When you're buying a home, ask about the property tax. Another thing that could kill you is incentives. Sometimes it's good to have incentives on new construction homes, but sometimes it's not, especially when you're doing the 2-1 buy down. Basically, when your interest rate is going to be one price for 1 year, it's going to go up the next year, and then it might go up the third year. Ask what your mortgage rate is going to go up to for the third year. You might can afford the house for year 1 and 2, but if you can't afford it for year 3, then what's the point of getting the incentive? Like, don't just go looking into a new construction because they're giving you $10,000 and they're giving you a 2-1 buy down, because you might be the next person where you're going to be saying, my mortgage payment was $1,500 and now my mortgage payment is $2,500 because my realtor didn't tell me this or the lender didn't tell me that. Like, you also have to do your own research when you're purchasing a home. I don't know, like, what questions do y'all have as far as purchasing a home, as far as property tax, as far as your mortgage going up? Like, you have to do your research, and you definitely have to ask questions before you sign on that dotted line, whether it's the day of closing and you have more questions for the lender, but you don't want to ask them because you're too excited. Always remember, you have to be the ones to pay the bills. Your lender doesn't have to pay the bill. Your realtor don't have to pay the bill. At the end of the day, you have to pay the bill, and you have to be the one out on the street. If you have to sell your house or what may have you, it might not even be worth selling your house, depending on how long you have been in your house. So you might not even have as much equity. But the tip of the day is, make sure you ask your lenders questions at the beginning and at the end. They always send out multiple disclosures of estimates for your mortgage. And also ask the closing attorney, because the closing attorney also goes over everything before you close on your new home.
Okay, so quick story time of how my mortgage increased by 120% and how easy it is for Black folks to lose their homes in America. Now, with that being said, I'm going to be completely transparent. I'm going to give y'all all the numbers. I'm just going to let you know, because ain't no point in hiding. I don't gatekeep, none of that. Okay, so the beginning of this month, I wake up and I have a notification from my bank saying that my account went under $100. This is interesting because the night before I knew the mortgage was coming out, so I transferred a good hefty amount over what the mortgage was going to be, and I'm like, drop below $100, that's crazy. So I get online and I see that my bank has taken a double payment with like a little bit more. So my mortgage is usually $100, baby, I wish, $1,100. And when I went to go check, they had taken out $2,400. So my first thought is, this is interesting. Like maybe what they did was a double payment. Like maybe something didn't come out last month, and so like maybe that's what it was. Like maybe this is double payment and like a late fee, but that wouldn't make sense to me because it's on auto pay. So if something happened and the funds were there, that wasn't on me. So anyway, I'm like, okay, whatever. Let me just check. So I scroll back up to see if the payment was taken out for March. Sure enough, it was taken out for March, a payment of $1,100. So I'm like, why did I get a payment of $2,400 taken out? So I call my mortgage company and I'm like, hey, what's good? I just want to make sure, like, I'm just trying to figure out what's going on. Like, why did y'all take out a payment of $2,400? And the lady's like, oh, that's your new payment. What do you mean that's my new payment? She's like, well, that's your new payment because you don't have enough in escrow and your taxes went up by $6,000. My taxes went up by $6,000. Now here's the part that gets crazy. So I'm like, okay, let me check all this out. So three things happened that caused my mortgage to increase. One, she told me that we don't have any money in my escrow. I'm going to talk about that in a second. We don't have any money in our escrow. Two, my homeowner's insurance went up from $2,000 to $4,000. Called them, they were like, well, we don't know what's going on, and like the mortgage rates are just the highest they've ever been in Texas right now. We ain't got nothing for you, basically. That's it. Like, what you gonna do? Started shopping around, all of that. The third thing, we'll talk about that again. The third thing was that my property taxes went up. So I go onto the county website to see like what the heck is going on, because this doesn't make sense to me. So when I calculate everything, my insurance had only gone up $711. I remember the number because 711. So I called back. I'm like, ma'am, now this is where everything pisses me off, and there's literally nothing we can do about it. There's nothing that we can do about it. We can call to try to get like cheaper homeowners insurance, but for the most part, it doesn't even matter. Now, so whenever I call this lady back, I'm like, or the company back, I'm like, I don't understand what happened, because every June or July, somewhere around there, they do an escrow analysis and they see, do you have enough money in escrow? For those of you that are new to home ownership, don't own a home, don't know what it is, whatever. Escrow is an amount that you pay every single month. So at the end of the year, they pay things like your homeowner's insurance and your taxes, right? So that way it doesn't come out of pocket at any time for you. You've already been paying all year, so they just write your taxes a check and they write your homeowners a check. Okay, you pay that within your mortgage. Now, and every July they do like an escrow analysis where they say, do you have more than enough? Do you have too little? Do you have to make something up? What's going on? Do you have a deficit or do you have excess? So they hit us up last month and they were like, yeah, you're good. Like you actually got too much. So we're going to send you a check. They sent us a check. They wrote us off a check for $2,900. Okay, cool, bet. Now, for those of you who are like, oh, you shouldn't have spent the $2,900. That way your escrow, baby, we can pay the $2,900 right now. What we cannot pay is an additional $1,300 a month. $1,300 a month is crazy. And there's nothing we can do about it. Like, we can't go back and say, yo, y'all told us we were good. They don't give a damn. They do not care, baby. They don't care. So they literally told us there's nothing, you just gonna have to pay this unless you have like all the thousands of dollars saved up right now to give to us in a large check. I think it was like 10,000, something like that. Then baby, you're just gonna have to pay this extra $1,300 every single month, and then we'll do another analysis. Anyway, I'm gonna have to do a part 2 because this is too long, but I will explain what basically we're waiting for in the next thing. If you have any questions, let me know. I know I didn't want to make this too long, but yeah, this is really what we're dealing with right now. And this is how easy it is, especially for people who are one generation removed from Jim Crow. My parents grew up in the Jim Crow South. Who was going to teach them about financial literacy? Who was going to give them that information to then pass down to us? Like, my parents are the first homeowners. Anyway, I digress. We'll talk about that, but I'll do a part 2.
a lot of times they will leave out information and then have you caught off guard, and then you still have to pay for their mistakes. That is one of the most frustrating things about this country. A lot of times we are not given all of the information that we need to make informed choices for our life. And so later on, we get punished just because we did not have all the information that we needed. And that is a serious issue.
Let's talk about monthly mortgage payments for a moment. For most of you, you probably have what's called an escrow account. That means when you make your one-time monthly mortgage payment, you pay off both your mortgage along with two other things that are in your escrow, and that would be homeowners insurance and property taxes. And those are going to be paid out of those accounts for you when those bills come due. Homeowners insurance is usually an annual pay, and then property taxes, depending upon where you live. Around here, it's two. Couple of things. Your principal and interest payment, if you have a fixed rate interest rate, you know what I mean, fixed rate interest rate, is going to stay the same for the life of the loan. However, your homeowner's insurance can and probably will go up. So I would encourage you to shop around every couple of years. And your property taxes also may go up year to year. So even though having a mortgage in and of itself is a fixed cost over time, unlike renting, there are parts of it that do increase, and that is something that you should be aware of when you're talking about your financial situation and talking about purchasing a home.
Believe it or not, your mortgage payment can go up. And you're probably thinking, well, Grace, no, I locked my interest rate. How does that work? There are 4 parts to your monthly mortgage payment: principal, interest, taxes, and insurance. Now, your principal, of course, is your loan amount. That is going to shrink over time. That part of your monthly payment is never going to change. Second, your interest portion of your payment. That, of course, is monthly payments made towards the interest on your mortgage. This could change one day if you ever refinanced your loan. But the last 2 parts of your monthly mortgage payment can and will change. First being property taxes. In Michigan, when you close on a property, you are required to file a property transfer affidavit with the city that you bought in. This is going to tell the city, hey, this house was sold, let's reassess their taxes. And I can promise you the taxes are not going to go down. And guess what's coming very quickly after you get the letter from the county saying your taxes have gone up? Your mortgage holder is going to send you a letter saying, hey, your taxes went up. We're going to need to increase your monthly mortgage payment to cover the difference in the new tax amount. How can this affect your payment? Well, if your taxes went up $2,000, divide that by 12 for your 12 monthly mortgage payments, your payment's going up $166 each month. Now, there's a helpful tool that I always share with my clients to estimate your future tax payments. Keyword estimate. But it's always something you want to have in the back of your head if you are thinking about buying a home and or are a new homeowner. And lastly, your homeowner's insurance. These rates are, of course, going to fluctuate over time as well. But the tax difference is usually the number one thing that people don't plan for and they're not aware of. And my number one recommendation to people is when you are having conversations with lenders, they're giving you numbers, monthly payment estimations, all that jazz, make sure you tell them that you would also like to keep in mind the future tax reassessment. That way, they can give you an idea of what your monthly payment will adjust to after that happens. Period.
A quick reminder, please remember to like, comment, and subscribe down below, and let's continue the video.
Nobody explains this until it happens to you. Let's talk about how your mortgage payment just went up out of nowhere, and it is not your interest rate, it's an escrow shortage. Here's what's going on. Your mortgage payment includes a portion that is going into escrow for property taxes or insurance. If either of those goes up, which they always do, your lender has to cover the difference, and you're going to pay for it. Now your mortgage payment goes up to make sure that you have enough in escrow moving forward, plus to cover the difference that they paid. If that's happened to you, don't freak out. Go ahead and send me a message and let's talk about your options. Tomorrow, I'll be sharing another video on what you can do to keep this from happening to you.
Okay, so here's something they will not tell you when you buy a house, or at least they didn't tell me, and now I'm salty. So when I first bought my house, my mortgage payment was $1,151. After my first year living in that house, they raised my mortgage to $1,579. The fuck? I thought I was tripping. That is a $428 increase. I was under the impression that my mortgage payment would literally never change, but I was wrong. So here's what happened, and I'm going to use example numbers. So let's say there's a house and the value of that house is $20,000. Because the value of the house is so low, that means that the property taxes are also going to be significantly low. So let's just say the property taxes are only $500 per year. Okay, now let's say an investor comes in and rehabs the entire house, puts everything brand new into the house, boom. Now it's a beautiful home. And now the value of that house is $150,000. Okay, now because the value of the house went up, that means that the property taxes are also going to go up. So now the property taxes are $2,000 per year instead of $500. And this is what they did not tell me. The fuck? So basically, I believe it's every single year they come and do an assessment of your house. And they say, what's the value of this house from last year to this year? And if your property has increased in value, they are going to increase your taxes. Now, I am highly upset with the people who my mortgage lender and my realtor for not explaining this to me. And the reason why I'm so upset is because I would have been okay with that if they would have explained that to me and I was ready and prepared. But no, I just got a bill in the mail and it said a $428 increase due in 2 months. I believe the issue is a lot of the times, especially when it comes to young people and first-time home buyers, realtors and mortgage lender, whoever you're dealing with, they don't want to give you all the information up front because they just want to make the sale. They just want to make money. And I believe that is so unethical because now I don't even want to work with you. Like, just tell me so I know and I'm prepared.
Of my $2,000 mortgage payments, yes, I know I'm incredibly lucky to have a mortgage payment that low because I'm one of those people that locked in below 3%. Anyways, of my $2,000 mortgage payment, $900 of it is for escrow. Escrow is the money that gets set aside to pay your taxes and insurance. $600 goes to interest and the remaining $500 goes to principal. 75% of my payment goes not to principal, does not pay down the loan $1. It's not just about interest rates, folks. It's also about the escrow. It's about the taxes and insurance. Start paying attention. I made a video saying home ownership is not worth it unless you're staying in the house for a really, really, really long time, and that pissed off a lot of people. But the math just isn't there. The average American moves once every 7 years, and if that's the case, it makes no sense to buy.
It's that time of year again where my mortgage payment's going to go up. So every October, my mortgage company does an escrow analysis, and inevitably they tell me my payment is going up because property taxes and homeowners insurance have gone up for the year. I'm too much of a planner, and I'm an accountant working spreadsheets all day, so I could not stand not knowing how much it was going to go up and be given like a 1 month notice. So I looked over their escrow analysis that they provided, and I created a spreadsheet to pretty much replicate what they did so I can calculate it ahead of time. I'm sure every company is different, but we are required to have 2 times our escrow payment amount in our escrow at all times. So if it is projected to drop below that 2 times amount, then that is what creates a shortage in the account. We will be projected to have a shortage in the account. So based on my calculations, our monthly payment is going to go up $106.86. I should be getting the analysis report in the next week or 2, so we'll see how they compare. We could pay off the total shortage in full, but it's $1,300. I really didn't plan for it, so we probably won't. But if you don't want to be surprised about how much your mortgage is going up, I say take a look at your escrow analysis report and see if you can replicate it. Let me know if you have any questions.
I just paid our April 1st mortgage payment. We just bought our house in December at a 7.25% interest rate. And I knew that was a high interest rate. It is a high interest rate, but you don't really visualize it in like a dollar form until you start reading your statements. So my payment is $2,480. $225 goes towards our principal. $1,698 is interest. And $556 goes to our escrow account. And that's only paying for taxes because we pay our insurance out of pocket. So yeah, think twice before you buy a house. No, I'm just kidding. Buying a house should be a good investment. But best believe I'm refinancing as soon as I see it down to like a 5%.
Just $200 is for the principal. $1,800 is for the interest. Can you believe that? So when in the world will you pay off all of the principal? How many years? In 30 to 40 years maybe? That is literally a scam. How can majority of the money just go to interest like that? Not even half and half. When in the world will you finally pay off the principal so there's no more interest?
Like, I didn't know that when I was building a home that I was just gonna have to pay taxes off the land, and then when the home is actually built, then you gotta pay taxes on the actual home and the land, which increased my mortgage by $3,000. I didn't know that. So now my mortgage is increased by $3,000 from what I'm currently paying. You know, and plus you still got all these other expenses and stuff like that. I don't knock buying a home. I think the goal should always still buy a home, but you should be prepared to know what's to come. Like I say, if they would have told me like, hey, your tax is going to be based off of this number instead of this number in a year, no, that wouldn't have changed my decision. I still would have moved forward. But if they would have told me that, I would have been prepared and not, look in the mail and be like, bro, who this for? You feel me? Who is this for? I know y'all ain't trying to increase my mortgage. And then a thing like that is like, it's aggravating, because it's like, bro, you think I'm just about to allow you to bully me? I feel like I'm like y'all trying to bully me. Like, you think you just about to just get 3,000 extra out of me and no say so. But come to find out, this is how this junk is. So I wish I would have just known a little bit more. But at the end of the day, it wouldn't have changed my decision at all to build a home at all. I'm still thankful, thank the Most High that he, blessed me and my family to be able to do so. I'm not complaining anything like that. I'm very thankful, but I just wish I would have more prepared to that. But at the end of the day, it really don't matter, because guess what? The house is going to be paid off. Like I say, I would never be victim of a situation. I'll always be a victor of anything. So they can try to increase whatever the case may be. It doesn't matter, because guess what? The house is about to be paid off anyways. So it really don't matter. But for the people that don't know, if you buy a home, make sure that you got all that information in place, the taxes, all that stuff, what the house going to be. Make sure you know all that stuff going into it, so you can be prepared, and not be shocked when you look in the mail and be like, who this fuck? And then also the escrow, you got to know what's going on with the escrow, because if your escrow is short, now you got to pay the shortage thing that increase your mortgage as well. So if you could pay extra inside your escrow, make sure you could pay extra. Make sure you do so. If you just paying what's, what the mortgage company got you set up with, 9 times out of 10, when that when your taxes and stuff go up, that escrow gonna go up, and it's gonna cause a shortage. So be prepared for that. Just get educated all the way around with the buying experience. Just be educated, so you can be prepared when you buy your home, purchase your home, build your home, whatever the case is. So pay attention to the taxes, the escrows. If you're in the HOA community, whatever the case is, just be prepared, But that's not stopping us from buying and purchasing and building, nothing like that. Still build and buy and purchase. Let's go.
So I got notice in my mail this weekend that my mortgage is going up by $500 a month because of increases in my taxes and insurance. Everything is going to be fine. I guess that's my sign that I need to start my budget for 2023. Honestly, I should have done this in December. I just hadn't gotten to it yet. But if you're like me and you procrastinate, here's a good time to start.
Your mortgage may increase is because the property taxes and the property value has changed on the house. So originally, if you're getting a new construction property and they just tax you on the land for the first year, and then people usually get an escrow check. Escrow is basically like an account that your money goes in to pay your taxes and your insurance, which is your PMI, not hazard insurance, to make sure all that is paid in your loan or whatever. And what happens is the property goes from only being a land tax to a land and house tax, which can cause an increase. So a lot of people aren't prepared for the increase. So what I was told was to try to add an additional $10 to $20. It may work a month. So if your payment is $1,300, send in $1,320, but the $20 basically put it into your escrow account, so that way your payment doesn't increase. Now, it doesn't always work in all cases. Every loan is different, but I do plan on trying to do that with mine. That way my escrow won't increase too much. Well, basically meaning my payment won't increase way too much where I personally won't be able to afford it. So hopefully that helps.
We cannot keep doing this. My husband and I got a notice yesterday that our mortgage payment is going up almost $200 between taxes and insurance. On top of that, my car insurance has gone up. My health insurance has gone up with less coverage. My health insurance now barely covers anything, but the premiums are higher. And daycare costs, insane. Daycare cost, I know colleges that are cheaper than daycare. My college degree costs the same as what I would pay for my daughter to go to daycare for 1 year. And I don't send her to a fancy daycare. That's insane to me. And then on top of everything, I used to be able to go grocery shopping, I kid you not, $100 every other week. I would make it stretch and we would go grocery shopping and I would spend maybe $200, $300, $400 a month on groceries. I probably cannot get out of the store for less than $120 a week now. And that is with me being frugal. I do not know what to do anymore because it's getting to the point where if things keep going up, I genuinely am not going to have money to pay the bills that I have, let alone to pay for food, to pay for clothing, to pay for necessities to get by, like just toiletries. This is just for household bills. I'm almost at the point where I don't know how people make it on one income alone, because my husband and I are both working and we are getting by. I don't know how people are doing it now.
Did you know that mortgage literally means a death pledge? Like in French, I think that's how you translate the word mortgage, meaning that the deal dies when the debt is fully paid off. I need them to rename that expeditiously, because why did y'all just increase my mortgage by $500? Take the mort out, because it's not giving that this deal is dying anytime soon. Take the mort out. Add viva la edge. The only time this deal is dying, apparently, is when I do. Was never giving mort. It's giving living. And another thing, I want to be included in the rent is too damn high narrative now, okay? I want to be a part of that narrative. Why are y'all trying to be exclusive of those of us that sip the damn Kool-Aid that we should buy a house? Mortgage is too damn high too. Why am I paying this much to exist, to live, to be housed? Nobody asked y'all to start building houses. We could all be out here frolicking in the streets, lollygagging outside. We could be, but y'all decided to do all this and then now I have to pay for it.
When we first bought our condo, we were paying about $1,900, and now we're paying about $2,400 to $2,500 per month. Just in the past, I would say 4 years. Just imagine that. It increased by about 25%. It's a lot. It's a lot, honestly.
Rhymes, how the hell did my payment go up $1,000? That's the first call I received this morning from an old client of mine. Sometime last year, she bought a new build property, and she went with the builder's lender for the incentives, right? Understandable. But what it looks like is that the builder's lender, shame on him or her, decided to go with the unimproved land tax, which is a lot less than what the actual tax quote was going to be with the actual structure being on the land. So this causes a shortage in the client's escrow account with the mortgage company. Mortgage company is paying the tax and the insurance. So they say, okay, well, this is what it's going to be. So we're having to cover it for you. So now we're going to increase your payment in order to make up the difference. That sucks. But it's nothing you can do about it. So here's what you can do. One, you can go ahead and have your homeowner's insurance reviewed and shop it around a little bit to see if you can get a lower homeowner's insurance policy, especially here in Texas right now. A lot of people's homeowner's insurance is doubling currently. And so if you can see if you can get that a little bit lower, that help out with that shortage that you have in your escrow account. And then you also would you want to go ahead and make sure you file for your homestead exemption in the state of Texas, or anywhere else, but especially in Texas, because you will save a nice little chunk of change on that homeowner's insurance. On that property tax. The good news is it probably won't be $1,000 that she's going to be increasing her payment by. Bad news is the payment's still going to increase because you're having to account for the property tax that wasn't paid and wasn't quoted to you. So if you're buying a new build property and you're going with the new build lender or any lender, if they're trying to give you $300 property tax per month on a $600,000, $700,000 house, use your common sense. That's not real. You know, it may feel good in the short period, but in the long term, it's going to piss you off when you get that letter from your mortgage company. Okay? You don't get any grace for ignorance. You got to think about it.
I've been talking to a lot of people saying that you shouldn't be renting, you should have a mortgage because your mortgage is going to stay the same and it's going to be less than if you rent and blah, blah, blah. That's not necessarily true with property taxes and homeowners insurance and who knows what else. Your mortgage will go up, your rent's going to go up. Living in the States in this day and age is just plain expensive. We have caused other states that used to be inexpensive to be expensive. Houses are just expensive. Just live where you want to live because ultimately it's going to be expensive and go up no matter what, guaranteed. So I recommend you just live your life.
No, I have a fixed mortgage. I got a fixed mortgage when I bought this house 6.5 years ago. My principal and my interest have not gone up. However, my taxes have. My taxes have gone up massively in the last few years due to, I'm not sure, county greed, appreciation on my land. I have made no improvements to my house. I do not think my house is worth what my county is assessing it at. But yeah, no, my taxes have gone up enough to screw over my mortgage. But not because I didn't get a fixed rate mortgage. Yeah, I'm smart enough to do that. This was something, again, I couldn't have foreseen. I did not expect house prices to go up by that much, and then therefore taxes. Like over the course of a 30-year mortgage, yes, I expect that house prices would go up. Again, that was foreseeable. What no one foresaw was in the last 4 years, house prices like doubling. Nobody saw that coming.
I, along with many other people, enjoy going on Zillow and looking up exorbitantly expensive houses across the world. And I remember one time I was looking at this house. It wasn't even that expensive. It was like $7 million. And you know, on Zillow it says like estimated monthly payment for your mortgage, and it said like $100-something thousand a month. I remember saying to my mom, like, that's crazy. They have enough money to spend $100,000 on a mortgage a month? That's like your entire salary. And she giggled and looked at me and said, Maddie, those people aren't paying mortgages. They bought that house with cash. And that is so scary to me. That is so scary to me as a person that pays rent.
Our mortgage is $2,500 a month and our income is $6,100 a month. Not even income, that's like what gets deposited into our bank account. Now I do make some money from TikTok now, but let's pretend TikTok went away tomorrow, right? So our steady income is my husband's paycheck and it's $6,100 a month, okay? And our mortgage is $2,500. So this person's saying that that mortgage is way too high for $6,000 a month. Now, I will say, if you do the math on that, it is about 40% of that take-home pay. Don't come at me and ask, how did this mortgage get approved? It's because lenders go off your total salary, your total income, your debt-to-income ratio. So we don't have any other debts besides our car loan. So I think that helped out. Again, this is after deductions, after taxes, after retirement. Okay, but that's not even what I'm trying to say here. What I'm trying to say is, I think people will come back at me and say, well, according to the rules, it should be 50% to needs like housing, groceries, utilities, 20% to savings, and 30% for wants. Like that's how your money should break down. And okay, great. But also, that's not realistic for a lot of people these days. And also, guess what I want? I want a cozy, comfortable, clean house without pests, not an apartment. Like that is a want. I don't need to travel. Why would I spend 30% of my money on wants? I would way rather spend more money to my housing situation and less money to eating out, buying clothes, traveling. Yes, ideally, I would love to do all of those things, but it's like, yeah, I would rather like not buy myself clothes for like 4 years so I can have my mortgage in a nice house that I like, in a comfortable, cozy, warm house that with a good roof over my head. You know what I mean? We're here in the mindset like 30% on wants is like way too much. Over here, like it should be like 70% needs, 20% savings, 10% wants. Like that's how your income should break down, I think, but like whatever.
The thing with like all of these rules or whatever is that there are a lot of exceptions to the rule, and you do what works best for you and your personal finance. That is why it's called personal finance, because it's personal. You do what is best for you at that specific point. And I think that she's fine, honestly. I appreciate you guys watching the video today. Please make sure to like, comment, and subscribe down below, and I'll see you guys in the next video.